Malaysia is experiencing a digital revolution in the e-wallet market, driven by increased smartphone accessibility and a government initiative for a cashless society. And the market has seen explosive growth with 11.5 billion e-payment transactions in 2023. We can see that local players like both Tashengo's e-wallet and GrabPay are competing with global giants such as Alipay and WeChat Pay. The Malaysian government has supported this growth through initiatives like the Tunai program and a regulatory framework that encourages innovation while ensuring consumer protection. This intense competition has led to numerous benefits for consumers, including promotion, cashback offers, and new features. And the fintech boom has also created thousands of high-skilled jobs, attracting talent and investment to Malaysia. And the outcome of this e-wallet showdown will depend on which platforms can best balance technological innovation and understanding of Malaysian need and value. And to discuss further, joining me in the studio is Ms. Yi Chung Ng, the partner AC Ventures. I want to say thank you very much for joining me. As you can see, I've just presented the usage of e-wallets in Malaysia, but that is data since 2023. We can see there's an increased usage of e-wallet transaction within the within the community. But we want to talk about within the larger scale, within the economic transformation. Maybe in what ways the rapid adoptions of digital payments catalyzing the Malaysia shift within the e-wallet market. Maybe you can share with us.
Sure. I think I mean, what we've really seen is an unprecedented growth in overall digital transactions across the region. I mean, Malaysia is definitely no exception. I think more importantly, what we've definitely seen from a consumer behavior, and this has largely been accelerated by the entire pandemic scenario over the last 4 or 5 years or so, is that firstly, this behavior is here to stay. I think that's number one. I think number two, we constantly and progressively continue to live in a world where it's entirely what I call interoperable. And what's important in this phase is that as we become a more global society and as we increase inclusion across the rest of society, we only want to see more progress with regards to how consumers, citizens, and so on and so forth continue to be able to interact with all these different platforms, all these different entities, businesses, and so on and so forth. So increasingly, it becomes even more important for two things. Number one would be the seamlessness of this interaction between all these different parties. That's number one. But number two is really the security between all these different parties. And ultimately, all innovation, the bulk of innovation really progresses towards these two aspects, largely.
And definitely, we can say one is here to stay. Second, they will also look at the cybersecurity of this transactional. And we will also want to touch on the sector impacts. How will the move to a cashless society will impact the dynamic sectors like banking, informal, especially in the terms of competition and innovation?
Ooh, okay, so that's a big one. I think in general, so people like you and I, individuals in the street, we think about our daily transactions on a regular basis. But what we don't think about is really the cost of cash. And I think just to put things in perspective, the cost of cash in general could be equated to about 5 to 10% of any given transaction at any given point. And why is this the case? I mean, you may be thinking about it in terms of the actual physical action of transferring cash, but it's really the reconciliation, the operations, the AML rules behind it, and so on and so forth. And that's not a small number. 5 to 10% is not a small number. Just to put things in perspective, if you think about the fee that is paid on any given transaction on a debit card or a credit card, for example, you're talking about anything from 20 basis points to 300 basis points. So that 5 to 10% is not insignificant. From a competition and innovation perspective, we've only seen an advent of both local as well as international players enter the fray. Why is this happening? I think it's really a progress of globalization as a whole, number one. But number two, as we see shifts in global supply chains, whether it's an Alipay or whether it's a WeChat Pay coming to Malaysia, or whether it's a TNG Digital and Boost and so on and so forth growing domestically, it's really been driven by this entire movement of innovation across the space. And why is this important? Is really because ultimately this is driving the participation of whether it's banks, different types of FIs, retail platforms, the likes of Grab and so on and so forth into the fray. And that's only going to continue to grow.
And what we want to continue to grow is financial inclusion. So how can we make sure that in what way specifics do e-wallets can serve as a tool to bridge the financial gap, especially in the underbanked populations and the rural areas?
Yeah, absolutely. I think first and foremost, if you think about the history of cash, we started from, I guess, products or gold, if you put it that way, moving on to paper, and then to plastics, and to coins, and now to where we are today. And really, we've been transitioning from this physical to digital realm of sorts. If you think about like the underbanked and unbanked population, it's largely been driven by access, and access is largely driven by the ability for that for society to actually have access or have those touch points to those mediums, really. So we've reached a point where we are actually evolving not just the mode of I guess transactions, but really the channels of transactions. Digital is really the lowest cost manner in which we can do that, whether it's in the form of like e-money, wallets, and so on and so forth.
Okay, we also want to take a look at technological innovation. What cutting-edge features do you see emerging in the e-wallets landscape?
Sure. I think like coming back to the first two aspects, which was really the seamlessness of transactions as well as the cost, but on top of that, the security behind it. Really, the primary innovation behind it really at the moment is being able, how do I 10x those transaction volumes, those transaction speeds, but as well as those transaction security features across the board. I think that's really step one. I think step two is really enabling, whether it's an individual like myself or yourself, to really transact across different platforms, not just across different platforms domestically, but then internationally. How do I have as simple as an access to global stock markets, to being able to purchase things from abroad, to basically being able to settle in different currencies and so on and so forth. Previously, I mean, like we take most of these things for granted today, but not more than 10 years ago, or even 20 years ago, I think most of these things were out of reach for the average citizen, and I think like we've come a long way.
And how are this, we can say, innovation are fundamentally altering the consumer behavior, and we want to see how is this opening new revenue and set new growth?
Absolutely. I think the proof is in the pudding. I think like what we've really seen is that today, I think if the numbers don't lie, on average, the average Malaysian citizen uses a digital payment method once a day on average. I believe the number is closer to about 350 or 340 transactions in a given year. Not more than about, give or take 5 years ago, this number is less than half of that. And just to put things in perspective, just to put things in perspective in regards to how fast the world has moved in this regard, I think in the early 2010s, the average Indian citizen in India was barely using one digital transaction a year. This number has exploded across the board, and more importantly, I think historically speaking, we've seen this allow, as you pointed out, access, whether it's to the underbanked, the unbanked, or even the average citizen on the street. So I think like from the economic value to both the country as well as its citizens, firstly, the most important thing is access. How can the average consumer or the average citizen have access to just different touch points? How can they have access to different things available where they wouldn't have otherwise? And most importantly, once they have access, what can they do to that? What economic value can that unlock from, whether it's a business point of view, whether it's from a personal consumption or utility point of view? Those options are endless. It's a point of increasing the endlessness of options.
We now have increased a surge of players within the e-wallet sectors, but maybe YC, can you share with us what are some of the challenges for data consumer protections and regulatory compliance for the business to navigate and adopt? What are challenges for them to adopt this?
Absolutely. I think like personal data and personal financial transaction data has always been, a relatively sensitive topic. I think first and foremost, with regards to, what the world has been for the last 10, 20 years, I think number one has really been, how do I keep that data safe? As I mentioned earlier, while seamlessness and the cost of transactions is important, security is extremely important as well. You wouldn't want, personal credit card data or debit card data or bank data being leaked out into the ether. So I think like even on one hand, this is not a new thing. On one hand, I think the ability to keep those transactions safe, not just the transactions itself, but the data behind those transactions safe, has been paramount to everybody. The risk of a leak or the risk of a hack, for example, is just something that is something that most entities would never want to imagine, but it's constantly on watch for that. But with regards to where it leads to next, I think where we are in the world is a really interesting place. The world used to be flat, or the world used to be progressively flat, but we're reaching a stage globally where the world is no longer flat. I think global supply chains are shifting, defraying, things where sovereignty is becoming increasingly more important. You've probably heard of the news where in certain countries, not just personal data is important, but also the act of financial transaction data being stored onshore becomes increasingly important. And where does that take us? So from a company perspective, from a business perspective, this landscape is constantly evolving and is only accelerated. So if I was a business, for example, I would have to constantly pay attention to how not just in a single domestic country, those regulations are evolving, and those are evolving every day, but how that is operating across different countries, different regions, and how my business as a whole can address those things simultaneously. It's not an easy feat.
All right, maybe we would take a look on the consumer trends. We know that consumers are evolving as themselves, especially among the savvy tech youth. How will you see this group will affect the evolving shape ataupun dynamic landscapes of the e-wallet sectors in the long-term viability of the e-wallet sectors especially?
No, absolutely. I think like if you think about society as a whole, especially the one that is currently being driven by the quote-unquote younger generation, I think like first and foremost, most companies will take their cue or their clues in terms of this usage or adoption in the first regard, as these are the primary adopters of those modes of transactions. Today, we define society as like, I want things fast, I want things efficient, I want things cheap. Yeah. No longer are we living in an age where, there's tree pick two. It's pretty much today, I want everything. So ultimately, I think from a company perspective, one really has to think about evolving constantly towards those aspects. And I think like even though, most of us take payments for granted where I just go to the front of a McDonald's counter and I just make a payment, whether it's through QR Pay or cash and so on and so forth. But what we tend to underappreciate is the fact behind that is, hey, when I show my QR code, for example, or when I tap a card, for example, how does the cash move from my bank account? How do they verify I have cash in my bank account to the point where it actually moves from point A to point B? And how does McDonald's actually feel confident that I have the cash to buy this burger, for example? And really, I think like given that I expect my burger immediately or effectively in the next 5 minutes, that innovation has really taken leaps and bounds across the last 1-2 decades. Just to put things in perspective, if I had to buy like petrol at Petronas using my credit card, at one point that cash was stuck there for up to 3 days. Mm-hmm. Now, in most cases, as an individual, you don't think about it. But that cash being stuck for 3 days is almost 1% of the whole year, mm-hmm. And that's not a small number.